So I'm Tom Bengtson. I'm the publisher and editor of a magazine called Bank Beat, and we have a website called banknews.com. Magazine's actually been around since 1894, so we have readership that goes back generations, mostly in the upper Midwest, mostly in the community banking space. And our website is a daily source of articles, which we're posting a couple of times a day on there, mostly serving, again, the community banking world. But on the website, that's more national. So this is a topic that I'm very interested in. We have been writing about interchange, particularly in the state of Illinois. Illinois is a state that we keep a close eye on, and they had passed this Interchange Fee Prohibition Act a couple years back. It's been delayed a couple times just because the implementation, and you know this better than I, but the implementation of it is controversial and is going to be difficult. And so it's been delayed. But rather than me setting up the situation, why don't you tell us a little bit about what you're seeing going on with respect to interchange and why it's important.
Well, first thing is merchants um, have kind of ignored the value of cardholders. And that's where I like to start is, these merchants, if a typical cash retailer, uh, cash only retailer, once they start accepting cards, their sales increase 17 to 30%. And if they have high ticket items, 200 to $500, their sales increase as much as 60%. So they're getting all this value from cardholders. And then we've got retailers now that don't even want to accept cash. So they understand now that cards are really important because they don't want to take cash and deposit it in the bank and haven't been at risk of being stolen. Um, they're ignoring all that value. And so they want that value and they don't want to pay for it. But those credit cards have a cost. We went through this with the Durbin Act with debit cards. And, anytime a governmental entity uh, interferes with free market systems, it always has unintended consequences. The government thinks that, X is going to occur, and they find out it didn't occur. And they end up getting into this legislation loop that's endless. And then at some point they give up because they understand that companies do what's best for them and people do what's best for them. And there's nothing that they can do to change that, in the free market. So um, if the the states that are looking at this, I mean, it's obviously driven by merchant pressure, but it's not gonna roll out the way that they think it would. Um, for example, if some state was successful in trying to regulate interchange rates, the fallout would be greater than the benefit to that merchant. And the fallout or the unintended consequences would occur in many ways. First thing is retailers, only major retailers would receive a benefit. Normal retailers, in fact, normal businesses, they wouldn't even receive the discount. The discount would be eaten up in increased margins by payment processors. So the Stripes of the world and Square of the world, they would just say, "Oh, thank you. Our price is $2.99 and 25 cents. Well, you just gave us more margin." That's exactly what happened with the Durbin Act with debit, right? Is that the processors just ate up that extra margin. Now, if you're a Target or a Walmart or, you know, a major airline or something like that, yeah, you've got interchange pass-through rates plus a transaction fee. So you're going to benefit from, but the majority of small businesses are not going to benefit from it. Then the card issuers, banks, and Usio is a card issuer and a payment processor. Um, Banks are going to say, we can't fund these programs anymore. We can't afford to give you 2% back. We can't afford to give you this amazing point system that, you're redeeming for your Starbucks cards and, lavish vacations and that potentially goes away. But the bigger, scarier thing to me is as an issuer, these banks are going to say, push back to the card associations, the MasterCard, Visas of the world, and say, we can't afford to fund fraud anymore. So when a consumer, uh, drops their card and on the street and somebody goes and uses it real quick and, they have unauthorized purchases, they have a dispute mechanism to get their money back. They call up their card issuer or their bank and say, this wasn't me. And the card issuer, the bank, make sure that it's real fraud. And then the card issuer, the bank gives them back their money. Well, that card issuer eats that loss, in most cases. Sometimes it's the merchant that made the sale, but in most cases, it's the issuer that's gonna pay. And so if they don't have enough interchange revenue coming in to the card issuer, fraud systems are going to be disputes could likely go away. I mean, I can see that happening where card issuers go back to the card association and say, we're not going to do it anymore. We're just not going to issue your cards at all if you make us keep on doing that. And consumers are going to freak about that, right? Because we're used to being protected. And the other thing, which will surely happen, is that card issuers are going to tighten up who gets the cards. They're not going to want to issue cards to anyone that has a potential of committing friendly fraud, right? And so that's going to raise the criteria to receive a card to a new level. So what's that going to do? That's going to have less card holders out there.
Mhm.
Those less card holders are obviously going to be spending less. I mean, there's going to be less card holders to spend more at these retailers. So if this kind of boils down, the first thing is the merchants, they're not going to receive the benefit, not the everyday merchants. They're also going to see a reduction in sales because there's going to be less card holders. And so they the merchants kind of need to just realize that the card programs uh, are a huge benefit to them. If they're not happy about what it costs, the simple fix to this is raise your rates 3% and nobody will know difference. And it's just as simple as that. We talk often about convenience fees, which I'm totally against. And that's where you go to a restaurant and you have a great meal and you see at the bottom of your receipt and it says, oh, we're adding 3% to your bill for credit card fees. When I see that, and I'm thinking just in my normal consumer mind instead of a payment expert's mind, I instantly tell myself I will never come back here again. But if that restaurant would have just raised the rates 3%, I would have left a happy customer because I just had an amazing meal.
Mhm. Sure.
So,
So, hey, let's take a little bit of time to provide a little bit more background. I know that there is a lot of legislation that has been percolating at the various state legislatures. I mentioned Illinois earlier. Colorado came really close to passing a bill this year that the governor ended up vetoing at the last minute. But I know I'm in Minnesota. There was a bill in Minnesota. It didn't go anywhere. I know that Iowa was looking at a bill. It didn't go anywhere. But some of these want to carve out certain kinds of payments that they want to exempt from interchange. And I'm thinking of things like sales tax. And of course, in Illinois, um, you've got sales tax and tips. But what else are you seeing? I know there was something in Tennessee percolating. What can you tell us about how these things are working?
you know, um, Tennessee, and I'm not too well versed on Tennessee, but it had to do with cross-border, money transfers. And um, again, I don't have too much detail there, but again, it's going to be the same problem. It's where, when government intervenes into the free market system, it's going to have unintended consequences. The other thing is, the states are going to have a problem with any type of legislation that they try to introduce because most of this payment transactions are regulated at a federal level. And so um, and Visa, MasterCard, American Express, they have a lot of pull, all right? They have a lot of lobby power. So and if the nightmare to me would be if I wake up tomorrow and I have to create 50 different options to process payments in states. Um, I can tell you what our company would do for the first state that actually got it through is we would not operate there.
Mhm. Mhm.
We would not issue cards in that state. Um, if something went widespread, uh, it would be on the backbone of the Federal Reserve or the backbone of the card associations to make all these changes. Um, but again, the real benefit isn't going to end up at an everyday merchant. It's just going to be at the mega merchants.
All right.
Uh,
And you,
plus, yeah.
well, I'm sorry to interrupt, but the thing that's interesting is that the merchants will always say, "Oh, well, we'll save this money and it'll get passed on to the customer." How accurate has that turned out to be?
Well, first thing is they're not going to save the money, but if they think they're saving the money, I mean, Durbin Act already proved they're not saving the money. If they think they've got extra cash at the end of the month, they're going to put it in their pocket. I mean, it's the same thing with Stripe and Square. Their prices are fixed. And if their underlying cost structure changes to their benefits, they're going to keep the profits. So.
Yeah. And you mentioned some of the perks that come along with some of the credit cards, things like travel points and some things customers really seem to like. But your hunch is that those things would be jeopardized by any kind of laws that end up reducing interchange.
Well, surely there's no money for the bank to fund it,
Hmm.
right? So when a bank issues a credit card, they make money off of interchange. They also make money when people carry balances. Typically, these larger reward cards, right, that have a lot of point systems, people don't carry a lot of balances on those cards, right? You've got to you're talking about a higher credit worthy person that can receive those cards. So their real income has to do with interchange. So when interchange is at 2.5% and they're paying you back 2%, they're getting 50 basis points. Um, these point programs that they have, it's a direct relationship to the interchange. So if interchange doesn't come in at all, or it comes in at a reduced level, these programs have to change. And then guess what else will happen is banks, right? They do what's best for the bank. And so if they are losing, they have less income on one stream of business, they're going to find another way to get that stream. And, and that's another unintended consequence that'll come out of this potential legislation. Overall, I think the likelihood of any of these legislations uh, coming to fruition is probably none.
So your sense is that the card industry is doing a pretty good job explaining why this is a bad idea, or I mean, or
I think that the card industry always has a great voice, but their voice can be overruled, right? Uh, the reason why I think it'll never happen is because these payments are regulated at the federal level.
Mhm.
So, it's going to take something like a Durbin Act to cause this change. the Durbin Act, and if you're familiar with that, that had to do with debit cards, and it only affected the very large banks, right? Community banks weren't affected by that. They still receive normal interchange for their debit cards. Large banks, 12, I think it's 12 billion more in assets, they receive a dramatically reduced interchange rate for that. Um, so it's going to have to occur at the federal level. The states, they're not going to be able to do what they want to do.
Hmm. All right. Well, Louis Hoch, I appreciate you sharing your thoughts with us, CEO of Usio, a card payments processing company. And do you have any other thoughts you want to add? This is a story that my magazine is interested in pursuing and following, and especially as new legislative efforts in the various states pop up, we will be following that and sharing that with our readers. But uh, we could close with any other thoughts you might like to add about this.
Well, I appreciate the time. I think the state's efforts are at this point more politically motivated than they are in reality. If they really want to cause some change there, it's got to occur at the federal level because all payments are regulated at the federal level. So,
All right. All right. Thank you very much.
oh, thank you. Have a great weekend.
You bet.